If you have life insurance through your job, first, that's a good thing, seriously. Having some coverage is almost always better than having none. But here's the problem. Far too many people think their employer's life insurance means they're completely protected. And in many cases, they are not. Today, I want to explain why your job's life insurance is a great benefit, but usually shouldn't be your entire life insurance plan. Because from my claims expertise and years of experience on the claims side of this industry, I've learned something important. It's not enough to ask whether you have life insurance. You also have to ask questions like how much, who owns it, what happens if your job changes. Those kinds of questions matter. Let's start with how employer life insurance usually works. Many employers provide what's called group life insurance. Instead of each employee buying an individual policy separately, the employer purchases coverage for eligible employees under one group contract. Often, the employer pays for a basic amount of coverage. A common benefit might be 1 times your annual salary, sometimes 2 times, sometimes a flat amount like $50,000. Some employers also let you buy additional coverage through payroll deduction. That's a valuable benefit. But here's where people stop asking questions. Let's use an example. Imagine you earn $75,000 a year. Your employer provides 1 times your salary. That means your beneficiary would receive approximately $75,000 if you passed away while covered. Now ask yourself, would $75,000 replace years of lost income? Would it pay off your mortgage? Would it fund your children's education? Would it eliminate all of your debts? Would it allow your spouse to take time off work and grieve without financial pressure? For many families, the answer is no. That's why I always encourage people to think about what they're actually trying to protect, not just whether they have coverage. Another issue is ownership. This is one of the biggest differences between employer coverage and an individual policy. Your employer owns the group contract. Your eligibility is connected to your employment. So what happens if you leave that job? What happens if you are laid off? What happens if you retire early? What happens if your employer changes benefit providers? Depending on the plan, your coverage could end. Some plans offer portability or conversion options, and some don't. And even when those options exist, they may cost significantly more than what they did while you were employed. That's why I love employer coverage, but I don't like relying on it as the only plan. Before we go any further, if you're enjoying this video, subscribe and turn on post notifications. My goal is to provide practical life insurance education backed by years of experience on the claim side of this industry, so you understand these decisions before your family ever has to face them. Now let's keep going. Let's talk about portability and conversion because these are terms many people have never heard. Some employer plans let you port your coverage. That generally means you may be able to continue the group coverage after leaving your job by paying the premiums yourself if the plan allows it. Other plans allow you to convert your group coverage into an individual permanent policy. Those are not the same thing. Portability generally keeps you in a group style arrangement if available. Conversion moves you into an individual policy, often without new medical underwriting if you meet the plan's requirements and deadlines. Those deadlines matter. If you miss them, the opportunity may disappear. This is one of those details people rarely think about until they're leaving a job. Now, here's another concern. Many people change jobs several times throughout their careers. If your life insurance keeps changing every time your employer changes, is that really the stability you want for your family? An individual policy follows you, not your employer, not your HR department, not your company's benefits package. You own it. As long as you continue to meet the policy requirements, it stays with you regardless of where you work. That's a powerful difference. Now, does this mean employer life insurance is bad per se? Absolutely not. In fact, I often encourage people to take advantage of it. If your employer provides free life insurance, take it. It's part of your compensation. Use it. But don't assume it's enough. Think of it as one layer of protection, not necessarily the entire plan. Here's something else people don't always realize. When you're younger and healthier, you often have more choices in the individual insurance market. Waiting until after you've developed a significant health problem and significant health conditions may limit your options or increase your premiums. So sometimes the conversation isn't just about whether employer coverage is enough. It's about whether now is the best time to secure additional individual coverage while you have more flexibility. From my claims expertise, I want to share another perspective. When families file life insurance claims, they're usually not asking where the policy came from. They are asking whether the coverage is enough to keep life moving forward. Can they stay in the home? Can they continue paying bills? Can they replace the lost income? Can they care for the children? That's why coverage amount matters just as much as simply having a policy. Here's a simple exercise. Ask yourself these 5 questions. First, if I left my job tomorrow, would I still have life insurance? Second, if I died next year, would my current benefit be enough? Third question, do I know whether my employer coverage is portable or convertible? Fourth question, do I know who my beneficiaries are? Fifth question, when was the last time I reviewed my coverage? If you don't know the answer, that's okay, but now is a great time to find out. The bottom line is this. Employer life insurance is a valuable employee benefit, but it's exactly that, an employee benefit. Not always a complete financial protection strategy. Having coverage through work is a great foundation. Building coverage that follows you, regardless of where your career goes, is often worth considering as well, because your family's financial future shouldn't depend entirely on where you happen to work. If this video helped you look at employer life insurance differently, I'd appreciate if you subscribe. And if you'd like to review your current coverage, compare your options, or schedule a consultation, you'll find those links in the description and across my other platforms. I am Jasmón, Clayton. Keep pushing, stay curious, and always move forward.